Hi guys, welcome back for to another Q4FY25 video. So in today's video, we'll be covering two companies. So what we did the video yesterday, the overview of a sector or what to expect in for Q4FY26. I will do that video again in the evening, probably covering some other 3 to 4 sectors. I'll do it in the evening. But today I'll cover these two. In this video, I'll be covering Goldiam International and Phase 3. Actually, a couple of guys reminded me in my DM that I haven't covered Goldiam International. I actually thought I did, but apparently I haven't, right? So that's the reason. And yesterday under my video, one of you guys commented regarding Phase 3, right? And this was a company that used to be in my radar. It used to be in my tracking list in 2022. Okay, this Web of Global, many such companies that were doing really well. But then I think for the last 2 years they've had no growth or anything. It was the same thing, and I do not know how, like, I missed tracking it. Like, it just went off my radar. And then when one of you guys told me, I just quickly went through the PPT this morning, and then I was like, oh wow, like things are actually turning around. Okay, so yeah, we'll be covering these two companies. And guys, if you want to again, right, if I think most of you guys know that the investment checklist workshop, we are hiking up the prices starting from today. That is, today at 9:30 p.m. we will be hiking up the prices. So it is your last chance to buy the workshop, at that price only, at the current price that is there, which is 1,999. We will be hiking up the prices to 3K starting from today at 9:30 p.m. So make sure you're getting your hands on it. And so the Q1 FY25 result tracking will be seamless for you. Okay, anyways, let's start with Goldiam International. Goldiam International, if you look at it, the company, what it does is, they manufacture this, or they make this lab grown diamonds. Earlier they used to, like, were dealing with natural diamonds, but over the year, when the lab grown diamond there was a lot of shift. When we saw that there was a lot of momentum, the Goldiam International people switched over here. Take care. And if you look at their business model also, it's mostly an export related company. 80% of the revenues comes, 80% of the revenues comes from export. And not just that, over here, if you look at it, not just this 80% revenue comes from export. They, in the export market where they're doing, they don't have their own brand over there. Okay, matlab they make these lab grown diamonds for other brands, like whatever the brands that are there in the US, these people make for them. Okay, India mein unka khud ka brand hai, which is called as Origem. So they have their own brand called as Origem, but it is a completely domestic business. Okay, matlab it is only for India, by India, for India, kind of like that situation. Okay, now in this year, if you see, they've had couple of problems. If you look at it in Q2, there was a lot of order that didn't go through, right? They didn't get the containers and everything, and it didn't go through. And Q3, as a result, there was a lot of sales that bumped up from Q2 to Q3. Okay, Q4 is one of the normal quarters, and you see that the sales growth that is there, revenues grew 25% on a year-on-year basis. And agar आप Q4 on Q4 देखते हो, it grew by 32%. Now talking about PAT grew by 29% on a year-on-year basis, and on a Q4 on Q4 it grew by around 30.5. Interesting point over here is the margins. Although they've shifted from lab grown to lab grown diamonds, the margins has been very significant. Okay, if you look at the EBITDA margins, it's at 22%. Last time it used to be 20%. Like same time last year, it used to be 20%. Okay, now if you look at them, one of the major problems, like I told you, is they are catering 80% to the export market. When you talk about the export market also, where you're talking about Northern American markets, that is the US market. Because as you know, when you talk about diamonds, like in India, the preference is more towards your gold jewelry, या वरना आपका studded gold jewelry. Diamond में उतना preference नहीं है, because gold is something that's always seen as an appreciating asset in India. It's always seen as a saving instrument, unlike the diamond. Whereas in the US, diamond, they prefer diamond more than gold. Like, that's a craze over there. And that is why inka, like I told you, 80% is coming from that Northern America or the export market, आप बोल सकते हो. So here, what is happening, as you know, Trump is putting up tariffs. It's a very uncertain situation, right? Like, kitna tariff badega? If the tariffs are happening, who's going to absorb it? So now over here, company ka ye कहना है कि, like, if the tariffs are done currently, obviously the customers that is there, they will absorb 100% of it, but it will take time for them to absorb 100% of it. Probably initially it will be 50, then 70, then 80, then 100, right? It will be in this scale. Okay, now when that happens like that, so in the upcoming quarter, that is Q1 and Q2, it could impact some margins for them. Q1 and Q2 can be a lull period going forward in FY26. 2026 for them, ठीक है, because of various reasons. One is because of this tariff said imposition of tariff. The other thing is, because of this uncertain situation, the order book that is there, right, like usually what you see the order book, although it is healthy, like people are not really, how do I put this, there has been a certain set of delay in terms of placing the order and so forth, okay. So that entire situation, like because of this tariff ka situation that is going on around, we do not know how it will impact. We do not know ki like China mein kitna tariff hoga, yahan pe kya hoga. There is a little bit of uncertainty, because of which the company is expecting that Q1 and Q2 can be a little bit of dull, okay. And then after that, if you talk about the Origem, right, which is their B2C front store in India. They had targeted to open around 5 to 6 stores for this year, which they've exactly done. They have opened 5 to 6 stores. And going forward in the upcoming year, that is in FY26, they plan to open 25 stores. So store expansion is literally, is going to be massive. It is going to be 4x in this year compared to last year. Now here is the thing. Although they're doing this massive store expansion and everything, we still need to consider that this entire Goldiam ka thing, most of it is coming from export. Although you're doing 4x, in terms of store expansion and everything, it is still a very insignificant amount to the top line, right? Like domestic business doesn't contribute that much. Your own B2C business doesn't contribute that much. Even as of today, 80% is still coming from the export market, okay? So when you talk about this 4x, in terms of expansion, in terms of store rate, you also need to consider like, what does it hold any significance in terms to revenue, right? Because 4x sounds like a huge deal, but having said that, it is still, Origem is hardly contributing anything to the revenue. Maybe starting from FY27 and on forth of it, we would see probably Origem, holding a significant portion, because and maybe domestic businesses, that is something we need to track. Because I believe personally, I believe that, having a domestic business is much better than an international business, because, or an export business, because, of all these trade wars, some कोई कहाँ पे war कर रहा है, उसके वजह से आपको container नहीं मिल रहा है, and then you're screwed after that, right? I mean like it's such a sad situation that the management has full intent to do what it can, what it wants to do, or what it's promised the shareholders, but due to the circumstances around them, they won't be able to do that. But having said that, the market really doesn't care, right? Like आप कुछ भी करो, मतलब if it's your fault or not your fault, ultimately आपका sales growth नहीं आ रहा है तो market आपको ठोक देता है. So that is the thing. So that would be very interesting to see, once we see that FY27 onwards, like let's say if the store expansion happens maybe in Q2, Q3 onwards, if we see that the product mix is changing for the better, if we see that B2C may it is targeting more, and because B2C may obviously the margins are higher and everything, I think that would be an interesting play to watch out. But going forward, they're targeting a 20 to 25% kind of growth rate, that is for FY26 and FY27, okay? So yeah, that's it about Goldiam International. Now the next company we'll be doing is called as Faze 3, okay? So what does Faze 3 exactly do? Okay, so Faze 3 अगर आप बात करते हो, Faze 3 manufactures textiles, okay? Now what kind of textiles do they manufacture? Now you might see आपका sofa का cover होता है, right? Sofa का cover, curtains, bed sheets, all this what we call as home textiles. या आपका kitchen का table cloth, or that bathroom में, you have that curtains, right? Like or you put next to the tubs or anything, those kind of curtains. Your automobile, that is in your cars, you have the seat ka cover. So what Faze 3 does is they manufacture these kind of textiles and they send it across, to other brands. Basically a pure B2B play hai, theek hai. They do not have their own brand or anything. They're mostly catering, to third party people. Mostly you can tell, contract manufacturing या आप बोल सकते हो, like in that white labeling आप बोल सकते हो. Now if you talk about it, if you talk about like who they are catering to, like if you see 90% of their revenue comes from the export market, that is आपका Northern America, European Union, UK. This is where they cater to, ठीक है? And if you look at them, they cater to all this Walmart, Target, Marks and Spencer abroad, Home Goods, Marshalls, Donna Carey, New York. I think you might have heard about all these brands, right? Like very famous international brands. So these people cater to them, ठीक है? Now यहाँ पे क्या हुआ था? There was a time in 2022 where these people were clocking like really fantastic growth rate. Like I'm not kidding. kidding. You can go check. These people grew at one point even like 50% से sales growth किया था. Now why did that happen? Because I think this happened in the year 22 or 23. I'm not really sure. Because last year, if you talk about 21, उनका sales, I mean that was a time, right, where everybody COVID में था, सब lockdown था, basic कुछ नहीं था. So compared to that base, we had this, it was nothing. And obviously we had this huge demand, because everybody was coming out of lockdown, like crazy shopping हो रहा था at that time. उसके बाद क्या हुआ कि like one, the COVID का base was higher, ठीक है, everybody stopped doing this crazy shopping, that mad rush shopping went away. Second thing is US and Europe में high inflation होने लगा. Due to high inflation, consumer demand went down. Now also what happened, earlier all these stockists जो है या आपका retailers जो है, they stocked up because they thought this demand will continue. So they kept this high inventory in their showrooms, in their offices, whatever you want to call them, in their retail outlet. And क्या हुआ यहाँ पे, in high amounts of inventory का load up हुआ. There was no, again there was no way to sell this inventories, right? As a result, obviously जब आपका client, आपका retailer या आपका client, if they are only facing problem, you as a B2B, who will you supply to at the end of the day? So these were all the problems that were happening, for them. ठीक है. Now comes in this H2 of FY25, it's been a very fantastic year for them, okay? Because H2 of FY25 में क्या हो रहा है उनका, H2 of FY25 में like all these problems, as you can see, sort of started improving. Now you will see this across category, right? आप PDS भी देख सकते हो, which also works in the same geography, in the same area, and they keep talking about कि like demand situation has improved, inflation has been brought into control, वो जो inventory का hold up that was there, that has been improved, inventory was getting cleared, right? So all of these problems that is there, it started improving. Okay, so that is why you see these people also have started clocking up really good numbers. Now here is the thing, what makes this very interesting is, like I would say this is more like a turnaround play. ठीक है, मतलब जो टट्टी कर रहा था अभी all of a sudden अच्छा कर रहा है, मतलब it's more like have you seen that Bollywood movie? I don't remember what it is. It's like Sunil Shetty. I think he's the lead actor over there. Comes from absolutely no background, nothing, and then becomes whoosh, like like a rich person and everything. I mean, you get the point, right? Like it's like that, that protagonist who had nothing, and then all of a sudden becomes a lead, very rich fellow, kind of like that. I don't know if I'm making sense over here, but you get the point, right? So that is the thing. So इनका अगर आप देखते हो, they are guiding for a 22% kind of growth rate for both FY26 and FY27. ठीक है. Now why are they guiding for this growth rate? How is this going to come? What are they doing? ठीक है. One is, if you look at it, if you look at the situation, one is all this UK FTA deal that is happening and everything, right? Like ये सब से उनको momentum मिल रहा है because the taxes has been lowered, right? All of that. The other is, if you look at it, one, like I told you, the demand situation has improved, capex is happening, everything. Second, अगर मैं बात करूँ यहाँ पे, in the last 2 years they've done a lot of capex. ठीक है, they have really, they actually have 8 manufacturing locations. Out of this, the one in Maharashtra, let me get this clear. I think the one in Silvassa, I don't know if I'm pronouncing it right, and they have one in Panipat, okay? And they have another location where in all of these 3 locations, the capacity utilization is still at 40 to 50%, somewhere in this range, okay? Now they have a lot of capex. I mean, they have a lot of capacity left. The order book is getting stronger. The demand is improving, and that is why they're targeting this 22% kind of growth rate. Now here is the thing. This is what they're targeting organically, okay? Matlab with the usual order book and everything. Going forward, let's say if things get better with the US and India, let's say the tariff imposed gets lower, yeah, it is still like in that, usually, like I think right now it's at a 10% rate. If it gets improved even much better, or let's say if the imposition on China is higher, like 145, 100%, whatever, then it would get even more flow over here. But I wouldn't really consider this, because let's be very honest, right? Like all of these things, like Trump kya karega, kitna tariff karega and everything, it is something that is beyond your control or my control. Nobody has control over it. So I wouldn't invest like until and unless this is like a short thing, like on based on these narratives. Like I don't want to fall for this narrative. So I would like to keep this narrative aside. But management ne ye bola hai ki like if that happens, then the growth rate could be higher. But I do not want to consider that, because like I told you, this is out of our control. I would like to consider only the organic growth that is coming from their own capacities, from the demand condition that has improved, from their order book, which is a 22% kind of growth rate. Okay. Now, if you look at these people, if you look at a 22% kind of growth rate अगर आप देखते हो, ठीक है, and from FY25, that is 24-25 का revenue से, if you talk about FY25 में अगर आप 26 में 22% का growth rate, then the expected sales, like the exact expected sales for FY26 is 841 crores. ठीक है. Now the current, if you look at it, if you look at the FY25 sales number, sales grew by 23% and PAT was down by 14%. PAT was down because in this year they had a product one-time cost which was a product development cost. There was a capex that came up with a plant, because of which, because of this operational cost, unka PAT was down. And the management is telling कि like आगे जाके, because all the capex is done, everything is done, right? All the product development is done. आगे जाके in FY26 and FY27 we will see immense operating leverage. That's a quote unquote words. Immense operating leverage will be visible. Now if I talk about it, 22% growth rate, which means FY26 you can expect mota moti 841 crores in terms of sales. Abhi ka PAT margin is 5.8%, including all that, because of this capex ka cost and one-time product development cost. Now if I be conservative and if I take, ठीक है, आगे जाके भी ऑपरेटिंग लेवरेज शायद उतना अच्छे से नहीं मिलेगा, 6% PAT margin if I consider, then the company will be doing somewhere around 50 crores in terms of PAT. ठीक है. If I consider 7% PAT margin, they will do 59 crores. 8% PAT margin में consider करूँ तो 67 crores in terms of PAT they will do. If you look at one of the years where they did that 50% kind of sales growth, their highest PAT margin has probably been 10%, because of that. But I do not know if that 10% PAT margin will be possible for them, because that was like a one-time event situation that happened with them. So I think if probably that 7 to 8% PAT margin is probably sustainable for them. That should at least go through, considering they literally use the word quote unquote immense operating leverage should be visible. Now if I consider that, right, like agar aapka PAT falls in the range between 50 crores to 67 crores, in that range, then aapka 1 year forward PE as of today's market cap, which is 1500 crores, the 1 year forward PE lies between 23 to 30, in that range, which I believe it is still in that low growth low PE range only. It is not yet gone from that, sorry, not low growth low PE, मैं क्या बोल रही हूँ, high growth low PE, in that range. It's not really gone to that high growth high PE kind of range, right? It's not gone there. So I think it is still at a very decent valuation. But what matters over here is the execution, because it's very nice, they have done all this guidance and very strong guidance, बोला 22% करेगा and everything, but if they don't execute it, then all of it is just talking in thin air. And for me, I would say the biggest यहाँ पे execution का risk यहाँ पे आता है, probably the intent might be there, but since you're catering in the export market, one of the unforeseeable, like a known unknown risk, like what it's known कि like maybe some tariff का imposition India के लिए high होता है, because of which, या probably something happens in this containers, यहाँ पे कुछ war चल रहा है, because of the which container का prices goes up, and you're not able to find containers to deliver, because of which your sales get delayed, you can't clock your sales. These are something like known, but will it happen? The unknown part is, will it happen? It may happen, may not happen. If it happens, when will it happen? That is like a big question mark. Okay, so that is the thing. But I think overall, if you look at it, right, great, I would say very nice, because the capex that they have done, right, they have done some acquisitions, they've done a lot of capex in 3 of their plans, a lot of it is good. What is left is walking the talk. That is very very important, because here is the thing, right, any company can come and give guidance देना बड़ी बात नहीं है, but walking that guidance, उस guidance को execute करना, वही बढ़िया बात है. And when that company, when that management executes the guidance that has been given to them, that is when the shareholders make money. ठीक है. So that is, I mean, that is very important. So great, I mean, really nice. I'm and thanks to whoever actually made me read this company. ठीक है. So all in all, great, but let us see if it does or not. ठीक है. That is the thing. So yeah, that's that for today's video. I will do another video in the afternoon or evening, which will be covering the overview of all these sectors, right? That is what I'll be trying to do. But again, just a small reminder that if you guys want to analyze the companies, like see, like what I did was yesterday, somebody told me phase 3 may, somebody had commented right under my post, like phase 3, just check that phase 3 out. Why did you leave phase 3 out of textile? And today morning I got up, it hardly took me like 10 minutes, not even 10 minutes, I think 5 minutes. I went through the PPT, made the notes, and I'm able to here talk to you about it. The reason I'm able to do this is because I have a very, very strong checklist. I know exactly what to look for when I go and I look at the PPT, because the entire PPT, like I always tell, it is like a puzzle, and you have to find the clues and get the clues from the puzzle to make a statement. So that is the thing. Q1 is coming up. Q1 is going to be there in like probably in 2 weeks, almost 2 weeks around the corner. And if you guys want to understand how to analyze the companies, how to do so, not just analyze the companies but do so efficiently and quickly, get the investment checklist workshop. I can vouch, I can put my name behind it, and I can tell you, I can bet my name on it, and I tell you it is one of the best, not one of the, it is the best product out there in the market. Not a single bad review. That's how good it is. Okay, so that's all about today's video. I'll see you guys tomorrow. I have to hit the gym. Bye.